there's this misconception that people want to save up 20%. I know you and I.
Oh, we're talking about private mortgage insurance, right?
Yeah, yeah,
PMI.
yeah. So
we're not talking about FHA. We're talking about conventional.
Yeah, and
so I just want clear, make sure everybody understand what we're talking about. All right.
Yeah.
Go ahead.
But so you had mentioned about paying off the PMI, right? And some people were like, well, I'd like to be at 20%, but if we're chasing a market that's going to continue to appreciate, right?
Yeah.
Like, I mean, how long is that going to take you, and will you ever actually get there, right?
Well, I'm sure they'll get there, but by the time you get there, you have the house values going up. We're still going up, over 10%. I'm sure we're going to see, we're still around 19% last I saw, probably come out 18%. That's appreciation in a home year over year. Even 10%, right? If you're going to buy, 400,000, I assume that's the average right now. That's $40,000. Your house is going up a year while you're trying to save 80,000.
Yeah.
Right? So
yes. Tell me about paying off the mortgage insurance.
So what you can do is two ways. You can actually have the mortgage insurance in the rate, meaning that if your rate was going to be 5%, you have no mortgage insurance with a 5 3/8 rate or 5.5. I just, as an example, I'm not stating these are what the rates are. I'm just showing an example. You can raise the interest rate and then you don't have it because you're buying it out through the interest rate. The other way you can do is you can just, whatever the dollar amount is, you can actually pay for that out of, you can have the seller, any closing costs from the seller pay for that to go away, or you can pay for that yourself. I've seen a lot of TikTok videos and people talking. I heard that if I'm putting 10% down, I put not 8% down, buy out my mortgage insurance. Yes, you can do that, but you got to make sure that it makes sense. And the reason I'm saying this is, if you were never ever going to refinance, never ever ever, then it makes sense. But if you're going to refinance, if house values, at least if you're putting 10%, appreciate 10% this year, right? And a year from now, you probably refinance. In a year and a half, you're going to refinance, and then you're going to just lower it automatically, and your payment's going to be so much more. A lot of people look at, well, then I paid mortgage insurance and I don't get that money back. So you have to run the numbers to see if it makes sense, right?